Mm. Good morning. How are you doing today? How you doing today? I am Grady on the charts. If you don't know me, this trading is dedicated to this channel is dedicated to trading entertainment. I hope you guys would like and subscribe, support this channel. I know we have a very small community, and I hope so far you guys are enjoying what you've seen so far. It's been a struggle on the charts lately, but I think we're having a lot of fun um sharing this type of content with you guys. So before we get started, I know that you guys, you have to understand that these are some of the things that we just have to do before we get going, just to warm up, just to warm up. Okay, grab the groundhog from the glazed grass. Mm-mm. I've been speaking English all my life, but sometimes I have a very difficult time doing it. Grab the groundhog from the glazed grass. Gray geese in green field grazing. Grab the groundhog from the glazed grass. Gray gray geese in a green field grazing. Grab the groundhog from the whoa. Grab that. Okay. Do you see what we're doing here? All right, so right, we're making sure that what we see, we're interpreting what we see accurately, even as we're trying to um project that information, right? Grab the groundhog from the glazed grass. Gray grease is a green field. Gray geese at a green field grazing. High roller, low roller, lower roller. How can a calm cram a clean cream? How can a clam cram in a clean cream can? How can a clam cram in a clean cream can? Whoa, inexplicably mimicking him hiccuping. I wish my Irish wish watch. Nope. I wish to wash my Irish wee. I wish to wash my Irish wristwatch. I wish to wash my Irish wristwatch. Jingle jungle jangle joker. Mm-hmm. Mm-hmm. Around the rugged rocks, the ragged rascal ran. There we go. A little bit of vocal warm up this morning. Mm, mm. Wow. I think I almost got a cramp. Golly. 8 gray geese in a green field grazing. Okay. All right. Here we go. Let's go. All right. Today in economic news, we have just a little bit of the balance of trade for Denmark. Britain has the BOE interest rate decision. China has the balance of trade for April. It also has the exports and imports year over year for April. But there is no high time. I mean, sorry, high impact American news for this morning. It's 9:25 a.m. So recently, yesterday, we did have a little bit of news come out yesterday. We're gonna see if my internet connection will allow me to read off the interest rate decision. It came in at 4.5%. The Federal Reserve kept the funds rate at 4.25% to 4.5% for a third consecutive meeting in May 2025, in line with expectations, as officials adopt a wait and see approach amid concerns that President Trump's tariff could drive up inflation and slow economic growth. Policymakers noted that uncertainty about the economic outlook has increased further and that the risks of higher unemployment and higher inflation have risen. During the regular press conference, Fed Chair Powell said that it's too early to determine whether inflation or unemployment will emerge as the greater concern. And the Fed does not need to rush into adjusting interest rates. The central bank can afford to be patient, monitoring incoming data and adopting a wait and see approach. The Fed also said that although swings in net exports have affected the data. Recent indicators suggest that economic activity has continued to expand at a solid pace. And that's from the Trading Economics website. That's the United States Fed funds rates decision. That's what we came up with yesterday. So let's hop into today. We have 4 minutes before the market opens. Jump over here to trade. All right. So just monitor the market and monitoring this morning's market for a while in the pre-market. There was a lot of stuff that I saw here that was extremely interesting. Uh, I hope did you guys see ICT's video yesterday, which came out May 7th, 2025? He pointed out an entry off of a particular wick. And so this morning I was doing this. I was doing this, and this the thing that I was doing. I was just marking out some levels from the pre-market, from the evening session run up, right? So yesterday in the afternoon session, we had this run move up. Then in the aftermarket, we had this move up. Asian session, we had this sort of consolidation and then a move up. And I just marked out all of those areas on the higher time frame, which was like the 15-minute chart, I believe, where we were dropping down into these wicks and we were tapping into wicks in these wick areas. Excuse me. And I wanted to see if I could identify some of those areas that he described, but I didn't have a chance to put those in my notes because this I just did this just prior to the market open this morning. So I'm just gonna hop right into Notion and I'm going to today is the 8th. I'm gonna create a new journal entry for the NQ. And the only thing I'm gonna do is I'm gonna just pop in and add these images later and for later consumption. So this is a 15-minute chart. I want to look at a 5-minute chart, the same data. I also ran an OTE to correlate where those areas appeared in relationship to the to the to what percentage of a retracement that they were, right? So I could kind of get a better idea of if I'm looking for these wicks or gaps, right? I'm looking for these entries. I need significant confluence so that I can feel comfortable making my entries on these levels. And this information was right off the back of the information that he gave yesterday, which is repeated information. Another thing I also noticed this morning, we're going to get directly into today's charts, is we have midnight and we have our Asian session marked out. We have London. The green area is the London session. 29. We have 10 seconds for the market before the market opens. Just want to quickly evaluate what we want to say. Let's see if we can how fast we can say this. Market is open. The reason I paused, I just wanted to see whether or not we are going to jump up, hit the Asian session high, and then tank, or whether or not we are going to move to the upside. We hit that Asian high, and then we move down from it. But we're in that opening range. Now, I'm not gonna run over here and try to chase this right off the open. In the pre-market, we saw that we began to break down here right after we took out London. We ran back up to London high in this area. Then we began to break down. We had an imbalance on the 15-minute chart. We traded up into that level. This wick goes into a small gap right up here. This body closes below this up close candle, tiny little up close candle here. We drop down, return. Sorry, after we dropped down and returned, then we just collapsed. This is a 5-minute chart. So there's this massive imbalance here. We dropped all the way in. We traded up 70% of the range from this high to this low. Then we began to sell off into the open. As we saw, as soon as the market opened, we traded up and we touched the Asian session high. And we're right at the midnight opening price for Thursday. Okay. Um, so that's where we are right now. So we dropped down lower. We have this purple area, which is where we moved up prior night before. And then we have this area is where we moved up in the London sessions. We dropped down here into the premium of the Asian session. We tap this area, we move back up, we drop back into this area, which we had in a previous move up from here. Once we ran above the Asian session high right here, now we see that price is coming back in. Okay, it's kind of required my attention now. That's what I kind of want to see this now. So I'll move all of this stuff back because that's going to be for our notes later on. Because later we'll see how price interacted with these levels, and then we'll see if it becomes more useful to us in the future. Okay, so after out right immediately off the open, we traded up to the Asian session high. We tapped it. Here is London session. On the lower time frame, this is a 5-second chart. This is the 15-second chart. We notice how we interacted with that midnight opening price, and then we kind of slid just a little bit. Are we going to watch price slide off the open, even after we saw all of that pre-market activity? I think what we wanted to do is we just want to see what happens as price interacts with the London session low. So we're going to take out London session low. And so what does that give us the opportunity to do? Well, if we take out the London session low, then we'll see what price wants to do at or below these levels. We'll see what price wants to do at or below these levels. So this is the yellow line represents the London session low. So we could sweep the London session low, or we could um, break the London session low in order to set us up for a little bit of a, okay, we're dropping kids off at school this morning. It's a wonderful thing. But it seems like some people are experiencing a lot of frustration about it. So we just calmed down and we just barely swept the London session low. We have 1 minute and 28 seconds left in this 5-minute candle. So after the market is done, what I would like to do is I would like to see whether or not we could utilize the lesson that ICT delivered yesterday again to give us a little more clarity on how to use these wicks, um, how to use these wicks and gaps to formulate our entry. The wicks, the entries that he showed us yesterday, that entry, every last one of these purple areas, using those entries, very, very safe trades, very safe trades, very precise entry. And that was really, really cool. Mhm. Okay, that is very good, very, very, very good, very, very, very good. Mm-mm, mm-mm, mm. 20 minutes left in the hour. This is the third hour that we've traded back down into this range. Mm, excuse me. Let's see if I'll grab this, pull this across on the hourly chart, set up the quarter levels. Set up the quarter level on like this. You know, there's a lot here on my screen. Since we already utilized the midnight open and the Asian session high, I'm just going to make those levels a little bit smaller. I was taking note of how we traded into this wick and then we kind of broke down just a little bit. I'm not taking this opening range to um there's the Asian session low way down here. The Asian session had nice movement last night. Crazy. Like a rocket ship. Wow. All the way straight up, straight up, straight up, all the way through, all the way through to here. Then you drop right back in. London begins. Boom. Runs up. However, we have to also have to remember that we closed the market, the U.S. market, the sorry, yeah, afternoon session. I believe I can delete that. We closed the afternoon session here. So I'm gonna say maybe 50% of that range is down here somewhere. All right, so there's a possibility we could close that gap. Mm, 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 mm. This is not personal. This is not personalized financial advice, and I definitely want to make that clear. So this is not personalized financial advice. And open here. There we go. I just wanted to mark out where that gap was overnight. So we close here, open there. 50% of that total range is 20,072 minutes in. Market still moving down just a little bit. That 50% of that wick level has held up pretty well though. There's no hotkey for that. How many times have you experienced excitement and elation when you understand when you begin to see the correlations in the market, right? All of this excitement, all of this energy, just this real pumped up energy when you see all of the correlations in the market. And then, I mean, and you see this in your study, right? You see this when you're journaling, you see this when you're looking at price moves after they happen. All of the hindsight data, the back testing, and you see this very clear representation of the market. Then, hmm, then as you sit down to live price action, you see you experience something very different than what you see in hindsight. Now, I'm not saying that it's real. I'm not saying that this hindsight experience is real. That's not what I'm saying. What is this level? What is this narrow little level right here? What is this? Oh, that's the wick. That's that wick. I pulled it back on the regular time frame, so it pulls it all the way back to here. It should be right there. Okay. Excuse me. And then as soon as you begin to look at the market, live price action of the market, there is a massive difference between static price action and then watching price print. There's a huge difference between those two things. And that's one of the reasons why it really is very difficult to it's almost impossible. And it's not impossible. It's very difficult to learn from static images, even in your own notes about what you saw or how price developed in advance of seeing it develop on the chart. There's a huge difference between this ticking back and forth price action and saying, "Oh, yes, when you see that candle get to this particular point, you'll do this, right? You'll go short when you see this line up of image of candles on the screen." And it just doesn't really do it there. That image is literally captured between two ticks on that candle. So if you understand what I'm saying, it's like, so if you looked at it in hindsight, or you're looking at a still image and you say, oh yeah, these are the best areas to take a long or take a short, then you'll say to yourself, oh, okay. Fine. What you're saying is all I need to do is wait for a price to look like that, right? But it only looks like that for a split second, right? If I look at it later and then I try to take the I can't well, how do I put this? I can't take the trade after the trade is already played out. But then that's when I can look at it and it looks exactly the way it looks in a book. Live price action is moving constantly. This yellow line represents the Asian session low that we swept. We went down a bunch below it, came back up to it. We dropped down we dropped away from it. Now we're back up to it. It doesn't mean that we're going to do anything particular. I'm just making sure that I'm thinking, that's sorry, it's not Asia. That is the London session low. We just swept the London session low. We went below it. We came back above it. We dropped down below it, came back above it and closed, dropped back down below it onto this down close candle. The time is 9:43 a.m. And so price is flowing, ever flowing, ever moving. It's constantly in this undulation up and down. And you can't just say, "Oh yes, I saw a picture and that picture looked like this." If you saw that picture and the picture looks like this, and it says take your short here and put your stop loss down here below this level. That's interesting, except in live price action, and you see price shoving its wicks way down like this, shooting its wicks way up like this, and then the picture says, "Yeah, you just make your entry." It doesn't say anything about shooting a moving target from a moving boat, right? It didn't say anything about that, So the boat is rocking, and your rifle is rocking, and the target is moving across the sky, right? Okay, good job, guys. Good job. Thank you. It's very easy to do. So right now, I'm not looking for an entry. I'm not looking for an entry. I want a A quality setup. I want A quality setup. I want an A quality setup after 10 a.m. All right, and then I want to see where the macro is going to source out liquidity. This area was very interesting to me because it was the London session low. To me, that's a prime area to source liquidity. All right, because in the pre-market we went up above London. Now we're down below London. And that's a good place to source liquidity. What I saw that was very interesting, but I'm also keeping in mind this white line, which represents the midnight open. How we ran to that level, we put a wick above it, and then we dropped down from that zone. So then we have, I'll delete this, clear the screen up. This level represents that gap from yesterday's close to today's open. We're just above the consequent encroachment of that range. And it could be another one of those days where there's a gap between yesterday's close and today's opening price. And instead of us going to that 50% level and then retracing, we are going to the 50% level and continuing, right? We're just closing all the gaps. Matter of fact, not closing gaps, but we're just blowing directly through those gaps. So keeping that clear in head, keeping that clear in the old noggin. But again, yeah, right. I'm not looking for entries, and then at the same time, I'm looking for A plus setups. I'm looking for something that's super, super duper easy to understand. There's a very long wick on the 1 hour chart. It's a very long wick on the 1 hour chart, and it's represented with this gradient of this measured grade here. And I've graded that wicks from its low to its scoopity doop dop. And it's longer than the candle that follows it. And it also has a wick. And I did not grade that wick. So I graded this wick. And we came in very close to that 50% level of that wick. And price began to slow down at that point. Yesterday's Asian session high is here. I'm going to pull it forward for a split second. And then I'm going to put it back. This red line is the Asian high from not last night, but the prior day. Okay, move that back. Violated that. This is the 50% of that wick that we were looking at. 50% of the up close wick. And it is 9:47 a.m., just prior to the macro. Ooh wee, ooh wee, ooh wee. That feeling, that sensation was my subconscious saying, hey, the macro is one point of interest that we're looking for, right? The 50% retracement of this wick is the second one. It's at an interesting time and an interesting place at the same time. And as soon as as soon as I thought that, I thought to myself, we could be closing in on an opportunity. And I'll pull this little purple area forward. This is the area that sent the Asian session up last night. No, 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 sorry, not sorry. This is toward the end of the Asian session. That's toward the end of the Asian session. This is one of the areas though that we did utilize to move up in Asia. This long wick area here that's marked out with this grade from the low of this intersection to the high. Just watching that zone. All of this area. Now that I see it on the 5 minute chart, that's 7 consecutive down close candles could possibly serve as a bullish order block. We would watch just to see whether or not it would bounce price to send it back higher. Maybe not on a continual basis, maybe also on a short-term basis. 2 or 3 vertical 15-minute candles. Here's the 50% retracement of the gap between yesterday's close and this morning's open. There's that 50% level. It's happening at 9:49 a.m. We turn over here on this lower time frame chart. I'm catching my breath because I am instinctually thinking this is it, right? That's what I'm thinking. I'm thinking to myself, okay, 50% retracement, watch to see what happens. V shape or low, lower low, and then pull away. Why am I thinking low, lower low, pull away? Because there's 9 minutes left in the 15-minute candle. This is a brand new 5 minute candle as we enter into this area. All right, so I'm not thinking V shape. V shape would probably occur somewhere at the close of the hour, which is going to happen in 9 minutes. This hour closes in 9 minutes. 50% retracement. However, I am seriously looking now for a possible area to get involved because it's happening at such a confluential position. And it's saying, okay, well, yeah, the hour is going to close at 10. Obviously, that's what, that goes without saying. And this is where we are. Now, I'm waiting, waiting. I'm waiting because I want to see A plus setup, something super clean, something super safe, right? Super clean, super safe. And I didn't want to see it happen before the hour expired, right? Didn't want to see it happen before the hour expired. I would like to see the hour come to a conclusion before price begins to move back the opposite direction. Reason number one is it's going to give this a wick on this candle that is so extended that below it would be a chasm of price action, right? It would just be so much price action below it that it would not be a reasonable positioning for my stop loss. If I could have 10 grand a drawdown, it would be better, right? Because that means that the length between this area where we are now and here is, that much. So that's one thing I do not want to see is they do not want to see price give us any sort of extended movement between the end of the hour and the beginning of the next. Okay. Overall, price still looks extremely bearish. We are at the 50% of this gap, but it doesn't, it because the way that the price looks, it just does not look as if we dropped down into some area that was going to give us the support that we needed in order to move higher. 2 minutes left in the yada, yada, yada. Okay. We're moving away from that 50% level just a little bit. That's encouraging, especially now that we are 3 minutes into the macro. The lower time frames look as if they're doing a little bit of bouncing. I am watching the 1 minute time frame. All right, I'm watching that 1 minute time frame. Sub 1 minute time frames are very, very cool. However, you see the relative equal lows on the 5 second. There's a relative equal lows on the 15 second. Relative equal lows here on the 15 second. Hmm. 55 seconds left in the 5 minute candle. This is going to be the last 5 minute candle of the hour. All right. Okay. All right. Let's stop that. Let's stop that. You know, another thing that I did notice is although these are relative equal lows, is there a gap down here that we would have traded to if we took out these relative equal lows? Right? Because I think personally, when I think of a relative equal low, I think of a strong move down, kind of a V shape, relative equal lows, and then when we run out those relative equal lows, there's a gap down here to enter, right? But these bottoms are just relatively flat. But they're relatively flat and relatively equal. So I can't argue about that. Mm. 9:44. Ba 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 la, ba 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 bum. Hey hey hey, yeah, look at you. What are you doing there, buddy? Where you going there, buddy? Don't you run away from me, buddy. What you doing there, buddy? Boom. 3 minutes and 50 seconds left. This is that 50% level. So we swept the 50, we swept right below that 50% level, and then we just rolled over on me. Just rolled over. I don't feel like that's A plus. I don't feel like that's A plus because I still have this green line right here. That's why I did not think to even attempt to enter. I began to mark out little gaps and stuff that formed in price action, but these little gaps did not support the narrative that there was going to be area for us to run out, either here or on the 15-second chart. So gaps did form in price action between the low of this candle and the body of this candle, right? Boom, boom, boom. We did turn over in that area. I did not identify a market structure shift on anything but the 15 second. This is 1 minute chart. Only thing it has is this one small move up, this trade back in, close above these up down close candles, and then this move up to these candles above. 3 minutes left in the hour. 3 minutes left in the hour. If you asked a person how long they would wait for a large sum of money, everybody would tell you that they would wait. That they would be like, yes, sure. I will be there and I'll wait and I'll sit in the chair and I wouldn't move and I wouldn't do anything. But I think the real question is, how long would you be willing to watch other people turned over at that level right there? Press down through 58, 28. Ooh. Ooh, 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 ooh. Delete this. I think this is distracting me. These, this grade is on the wick on a higher time frame to the left, meaning that these lows are into the body of that hourly candle from the middle of the Asian session last night. Down here, we drop right back in after this solid move up, tapping in. 21 seconds left in the hour. My personal, if I could understand my personal, this is not even a bias. I think this is something else. Because a bias, I think you is a technical term from what you see in the market, and you develop an opinion. And I think that me personally, I don't think I have one of those right now. I think my personal opinion, not bias or anything else, is that I would prefer to see price drop down with this long range down candle movement to hit this order block and then reject it and then move higher. New hour has just opened. Let's see if we had like if we get that crazy rapid price action, right? What I mean by that is, price action just pops and just goes wild. There's the hour right there. That is the prior close. It's a down close candle. Now, where is my silver bullet? Where's my silver bullet suit? Hmm. I have a Sibby. I have a Bissy. I have a Sibby. I'm inside of this wick on the higher time frame. I have a lot of things to consider. Um, what I was looking for was 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 a buzz a was a was a. And I was thinking to myself, what I was looking for was really truly. All right, so we had this Sibby here, Bissy, between here and here, Sibby. Then we move back up high into this Sibby, hit this up close candle. Yeah, we moved up above that up close candle. Maybe I'll wait for a close. Maybe it'll give me a close. If it does give me a close, will it give me a drop back down into this in an an inversion of this up close candle, right? Nice close higher. Nice solid close higher off the new open for this new hour. See? This yellow line is the London session low. This is the grade of that wick off to the left. We're at the high of that wick, which is crazy to me. Literally at the high of it. We traded to the 50% level of the wick, moved above it, moved below it. Now we're back up above that area. And this entire range is encapsulated in that wick to the left on the hourly time frame. And it's not giving me any clarity per se. It's just interesting to see that right now. This blue line represents the close of the prior hour. It's also the close of the prior 15-minute candle. The low of this current up close wick is here. When we drop right back into this area, relative equal lows, fair value gap, all of that sort of stuff. No, not really. I don't really see it as clear as that on any of my time frames. Unless we take this BISI from this low to here and then pull it forward, then yeah, we drop right back into it. Then where are my relative equal lows? Can't really see them. Not really there. Price is a little bit lethargic in this range. That's to me not A plus. A plus, I need to see obvious sorts of priceal, not even a word, priceal confluence. Here is a BISI here on 1 minute. It's in alignment with all of the other gaps. I was looking for shorter term breakers, right? Sometimes you'll see that low, that high, and then that lower low. I did not see that either. Hmm. 30 seconds left in the 5 minute candle. Just trade it back to the smaller intersection of the prior up close 15-minute candles up here in this area. And it'll drop right back in. I was I was watching this area to see whether or not price would react at this spot favorably to a move back to the upside. Close of the gap between yesterday and today is right down here. These are relative equal lows, and these are also relative equal lows. Not really saying that that means anything right now because we're still sort of consolidating. All in all, this move back up to this up close candle and hitting the close of that up close candle is bearish. However, I'm watching I'm looking at our, somebody help me with the word, location in price right now. I'm looking at our location as where we are overall in price. That's the thing that has me the most concerned, whether or not this is going to send us higher. Mm, 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 34 seconds, 33 seconds. It's just, my confusion at this time. And I say this honestly about confusion, right? Clarity is the most important thing that I'm requiring right now. And the clarity that I'm requiring is showing me that, yeah, we dropped right down into opening range gap. We hit the opening range gap consequent encroachment. And then that was the catalyst required for price to say, oh yeah, overnight we moved this range. We just want to recalculate that during the daily range. So we just drop back into that gap. Now, moving down past that means something different. However, it does not mean that we won't go lower and then recalculate this at some other time. Stop at these same levels on the way up and say, oh yeah, we did do that, but we just didn't do that that day that you thought we were. For if this were a bearish price action, this would be the strangest spot just to sit in, unless we're just holding it for a particular time that we want to let it go, right? So maybe we only want to let it go at 10:10. So then what do we do until 10:10, right? Then we'll just kind of go back and forth. We'll just kind of go back and forth, just kind of go back and forth. Now there's 7 minutes left in this 15-minute candle. So I think last week's signature was every opening range gap remained open and unfilled and unaddressed. This week, every opening range gap we've traded all the way through it. These are those relative equal lows I was looking for on the 15-second chart. We just took out those relative equal lows below that 50% level. Oh, that's beautiful. You know, it's not clear to see. Why I took that level is just we just turned over on that down, and I said to myself, I'm going to get in right there. That's what I've been waiting for. I took that trade. That's what I was waiting for. I took it. But you got stopped out. That's fine with me. That's completely fine with me. I was waiting for us to run down below that level. When we did, I took that trade, and that's yuck. That's it. That's what happened. 12 seconds left, and there's 10 seconds left in this 1 minute chart. 6 seconds left in the 5. Now we just pop back up above that level just a little bit. Beep bop, boom bang. Let's see if we get anything usable here. You know, that reminds me of a funny video I saw the other day. And the funny video I saw the other day was this kid asking his dad about taking his girl on a date. And so the older guy was like, "Yeah, what you do is you ask her what it is she wants to do. Oh, no, she'll get in the car and you're going to take her on a date, right? So I don't want to ruin this. Actually, let me focus on this trade too. And whatever you say, you see, if you don't know where to take her, you let her get in the car, and then she'll say, "Where are we going?" And then you say, "Yes." And then whatever she says, that's where you take her. And he says what? He says, "Oh, okay. Dang it. I'm messing it up." He says, "Oh, okay, genius, right? That way I'll take her to the perfect place, is the exact place that she wants to go." And then she gets in the car And he's like, guess where I'm taking you? And she's like, oh my God, you're gonna kidnap me. He's like, it's like, yep, I am. And she doesn't jump out the car. He says, I knew it. I knew it. I knew how creepy you were when I saw your post on social media. And it's like, he locks the door like, yep, I sure am. That's exactly right. You guessed it. And so that's what I was laughing about when I took these two trades right here. It's like I said I'm gonna take those trades, and then regardless of whatever it was I saw, I didn't even change up, right? Because he could have said, he could have said, um, no, I'm not gonna kidnap you, right? He's like, no, he could have said, no, I'm not going to. Like, no, what's your second guess, right? He doesn't even say that. He just accepts it like, oh yeah, this is it. This is exactly what. And so that was the funny part that I was thinking about this when I took this trade because I feel like that was exactly how I saw. I was like, look, it's relative equal lows of 50 second, and then I took the trade twice. Like, look, that's exactly what I was looking for, and that's exactly what I'm taking. Oh man, I'm looking at the market like, oh yeah, the market's going down, but I said when I see these relative equal lows, I'm gonna take it. That's funny. That's funny, funny, funny. And then after we do this so many years, then that's the sort of um consistent sort of behavior that we are looking for, right? Sort of that fearless, almost blindly ridiculous confidence in our strategy, right? 'Cause we don't want to sit down at the trade and be fearful. We want to look at the market. We want to see it come to into our level, and then just like that, in that sort of ridiculous mode, we just want to take the trade. And I think that's what all of us have been practicing for, looking for, and attempting to get to a particular point where we could do that, where we just said, "Oh, there's my entry. This is what I want. I'm taking the trade." Oh man. Oh boy. I'm measuring a gap on the hourly chart off to the left. And we just dropped down below consequent encroachment and pop back up to it. Whew, and then, I'm looking at the range that we've covered, and I wasn't interested in getting short. If I was interested in getting short, then I would have taken it. I would have looked at the short off the open, or I would have tried to take that pre-market short. But because of the way that the market was moving, I really wanted to see any movement to the downside as a pullback prior to continuation. What? Oh. Mm, 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 mm. But you know what? Another thing that we can also kind of get from that particular little joke scenario is sometimes our expectations are the very things that cause us to live certain realities, right? So what if he's just like the subconscious, right? And she is the conscious negative thoughts that we think. Oh my God, we're gonna get deep this morning. What if, what if he's just the subconscious and we are her? We are that thinker who thinks those things, right? And so the subconscious is like, oh hey, look, whatever it is that you want to see happen, that's what I'm gonna do. Right? Whatever you want to see happen, that's what I'm gonna do. And so subconsciously we think, oh my God, XYZ. And it says, "You sure?" And we're like, yeah, XYZ. And it's like, okay, well, okay, fine, sure. It's 1016. And I'm looking at some strange price action right here. And I say it's strange. It's just that I like it. I like this price action right here. I just sort of like this. I like the way that it's pressing up and then kind of dropping back down into these wicks. I liked all of that. I liked all of that. Boom. Shoobity doop a doo. Elmo's world. Elmo's world. Ah, boy. Excuse me. Oh, yeah. Shoobity doo. Shoobity doo. World. Shoo booby dooby doo. Shooby dooby doo. Stop loss too tight. That's Elmo's. Stop loss too tight. Shoobity doo. Shoobity doo. Elmo's world. Shoobity doo. Shoobity doo. Elmo's world. Shooby doop 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 doo. Shoobity doobity doobity shoobity doobity doobity doo. That's Elmo's world. Shoobity doo. Shoobity doo. Doopy doo boo. I'm gonna move to break even. I'm moving to break even. Why? I don't want any drawdown on something like this. We're back to those relative equal lows. Back to those relative equal lows, and I think, therefore, so those are the relative equal lows on the 15-second chart that I was saying to myself, oh, I want to see if we can get down below those levels. Then we turned over at those levels, and then we drop right back down and take us out. Doggone it. Protective stop loss, though. We're gonna move that up. I'll take the $50 if that's all I can get. If that's all I can get, I'll take the $50. We're back up to those relative equal lows. Go ahead, press those equal lows. Press those relative equal lows, lower time frame relative equal lows, and drop right back in and drop back in and drop back in and doobity doo doo bop bop a doobie. Don't do it. Oh no. Don't do it. Don't do it. I'm not I can't do that. Don't just take off at this point. Please don't do that. Please don't do that. New 5 minute candle. In, in, down. Keep going. Keep going lower. Keep going lower. Indubitably. That's copyrighted by you know who? Bobby Puff. Is it wait and see or is it wait and watch? Wait and see or wait and watch? Because you know me. You know how I do. I'll sit here and I'll look at this 1 minute candle right here. And I'm watching as we drop into that thing over and over and over. And we hit that and we hit it and we hit it and we hit it like bam, 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 bam. I like it, but I have to watch it this time. I like that entry, but I have to watch it this time. And everybody's at home is screaming, "Dummy, no! No, that was it. Screaming, oh no, that was it." I'm just gonna watch it this time. I'm just gonna watch it to see what happens. This is the so funny. And we're back above those relatively equal lows on the 15-second chart that I was watching prior to those other entries. And now we're up, and I'm laughing, and I'm laughing. See, calm. Everybody's calm. Nobody's upset. It's all good times. It's all good times. I don't know. Oh, oh yeah, no. Oh no. Oh no. Oh, oh no. Oh no. That's trading entertainment, baby. That's trading entertainment. If you don't know what you're seeing right now, if you don't know what you're seeing right now, then you've never traded before. If you don't get it, if you don't see it and you don't get it, you're like, wait, how did that just happen? You never traded before. If you don't know what you just saw or how that just did that, then you've never traded before. I just came right down and only took my stop loss and then did this. All right. Relative equal lows. Relative equal lows. What time is it? 39 seconds. 36, 33, 32, 25 seconds left in this candle. 25 seconds. Man. When it ran those lows. Ran the lows right here. It ran the relative equal lows. Turned over. It did. Ah, well, sniper entry, piper entry. It's just one of those things where of us it's possible. The rest of us, we can only dream. You understand what I'm saying? Some of us is possible. The rest of us, we can only dream. Now we're to the point now where it's just, you know, I can't even look at my what do you call this stupid thing? Come on, if you're gonna go, baby, go. I need you to go right now. I can't even look at my P&L. I can't even look at my P&L because I told myself, look, don't watch the P&L. The P&L is not gonna change anything about what's happening on this chart, right? Low, high, lower low. Let's see if this level keeps price up. If that's a breaker. Let's see if that's a breaker. Because we had this low, that high, that lower low. It's there on the 15 second. It's a low, high. It's a high with with a low and a lower low, right? We'll see if that's a breaker. Because if it's a breaker, then we should not come down back below that level if it is a breaker. And we shall see. We shall see indeed. Because if it is a breaker, this is not a trade that I want to exit. I just want to let this one ride. If that is a breaker, until all of these little lower time frame trades here that kind of did something or other, and turns over, taps that level again. I'm asking you if it's a breaker. It's telling me it might be a breaker. Sometimes we are breakers, sometimes we're not breakers, sometimes we look like breakers, sometimes we don't look like breakers. And I'm like, well, then what are you telling me? Like, what are we really saying if you are, if you aren't? And it's like, look, you're gonna find out. You're gonna find out if we're breakers or not, but you're gonna find that out in the future. Not right now. Not right now, my buddy. No. And I'm like saying, well, I would like you to be a breaker. I would like you to go ahead and just break us all the way up to the upside and keep going. And it's like, look, buddy, look, sometimes you gotta take what you can get, right? Sometimes you just gotta take what you can get. And if all you can get is all that we're offering, then that's all that you're gonna get. That's all you can take. And I'm saying, goodness gracious, great balls of fire. You're absolutely right, my friend. That's all I can take. That's all I can get. It's terrible, terrible, terrible thing. But please do me a quick favor. And if you're a breaker, just break to the upside, right? Just if you're right, just go and keep going, keep going. So on 15-second chart, this is the area that I was just watching. Sorry. And there's kind of like this busy, sibby, sibby, busy scenario here. We moved above this level, and I'm gonna pull this forward just a little bit. I'm gonna try to use TradingView properly, but it's difficult sometimes for me to get the stuff on the screen to do right. It's just this weird sort of thing where, it's just hard to kind of get me to even get the boxes to move properly on the screen. Now there's this down close candle here that's saying to me, look, buddy, if I were a breaker, I've just broken you directly to this area here, and look, this is it because we're consolidating. So this is a low with a higher wait, this is a low with a high and higher low, all right? And it is this level represents the close of the prior down close candle. That's the close of the prior down close candle there. It's also on the 5-minute chart, this low or opening price of this closed 5-minute candle in this area, right? So that this up close 5-minute candle can send us in all types of directions, and we just have to be patient to see which direction that it chooses. Now, Grady, if you moved your stop loss and it stops you out below this blue line, how would that make you feel, right? What would the thought process be? And I don't think that would be much of a thought process, except that that would be the difference between price going up and price going down at this point for me. And there's a possibility that we could do that, but we're in the just closed the first 30 minutes of this hour, right? So we're in the middle of the hour. This is the second 15-minute candle of the hour. So that 15-minute candle having a very extended long wick below it or breaking down and taking us out, all of those things are on the table until we move above these candles and go higher. So all of that stuff is still on the table. And I'm in a protective stop loss, but I'm also in a scenario where um I really want to see this go to the upside. That's my right. That's my um unfulfilled that's my unfulfilled request at this point. This is that 50% level of that gap that we just closed off the opening for today. Now, we haven't had a 50% retracement on a gap in 2 weeks. So normally what it is like what 70% of the time price comes and trades to the 50% gap. That number in the last couple of weeks has fallen considerably. We're literally in the 60th percentile. as far as price dropping down to gaps, touching those gaps and then trading back to the upside. Because in the last 5 to 10 times, like I said, we've blown through that 50% level and kept going, or we never even re-entered the gap. So that's been the calling card the last few weeks. Either no retracement or we just headed straight through the gap. So that's kind of the deal that we've been facing right now. So we have a little bit of a slight push to the upside, and we're still not out of the woods. Why do you say that, Grady? Didn't we hit that 50% level and start trading back the other way? Yes. Now, wouldn't that be grand, right? Wouldn't that be amazing? That we literally closed that 50% tracement gap and then traded all the way back to the open. That would be that would be great. That would be a great, wonderful, grand thing to see. We do have imbalances up above this level here. That's concerning. We're near the high of that wick that we saw to the left. Breaking out of that would be really, really cool. But again, none of this stuff is really locked in just yet. But we did move up just a little bit and close higher up above this range, which I like, That's good. So we're just gonna hold. We're gonna hold, and we're gonna talk trash for a few minutes in anticipation of price trying to do something. We did close the gap. We closed the gap. First gap closure of May. The very first gap closure of May. If I'm not mistaken, this is the very first gap, 50% retracement of May. I have not adjusted my stop loss. There's no real need to adjust my stop loss. On the 5 minute time frame, I'm looking for closure up here. I'm looking for closure way up here. And then like that continuation. The type of continuation I'm looking for are very wide gaps on the 5 minute time frame where we're pushing levels, turning over in levels, and then moving higher. Because it's 1034. Now, what's important about 1034? 1034, very important places for price to really start changing direction, right? So we had our 1030 level here. Here is 1030. Bang. Now, 4 minutes after 1030, we are moving in this direction slightly. If we drop down below this gap, that would not make me happy. I don't want to see any inversion or any operation in this gap below any of this level. I want to see this take over as the element that monitors and maximizes price right here. I'm gonna take over, baby. Push it up. Okay, okay. So this says to me, look, we are not going to use this element to move price higher. That's what I see when I see us drop into a level like this. There are down close candles on the 1 minute. I think this is practically all I need to take and monitor this trade right here. This is that 50% level that we were looking at. We went down below it. We came back up above it. Now we're dropping. Yeah. Now we're right back here. That's that. There is a small gap right there. Blew it. Tap into the wick. 15-second chart. Let's drop right down in here. Hit the high of this down close candle. Up. Turned over. Even if we use this almost as a break and we moved up and dropped back into this gap, I was still watching this gap to see whether or not, sometimes on a breaker you will just drop down into the gap after it uses a breaker, moves up to a particular level, and then you just drop right back in. However, not this time. This time we are at the 50% retracement of today's gap, opening range gap. And again, there has been no 50% retracement of opening range gaps in the month of May. None. Not one. 5, 4, 3, 2, 1. Do 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 do. 1039. Pop, 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 bottom, bum, bum, bottom, bum, 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 bim, 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 bim. This is the literally that 50% level. Literally, that's the level. That's crazy. I mean, and it's like for all you guys out here thinking that you're looking for this 50% gap retracement, here's a song for you. 50, 50, 50, 50, 50, 50, 50. Like saying, oh, okay, thank you. Thank you. No 50% retracements this month yet. Not at all. Oh, actually, I'm wrong. That wasn't even a 50% gap retracement. The 50% gap retracement was actually here. Actually, this level above us. Actually, this line. I mean, well, yeah, 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 yeah. Oh, okay, yeah, yeah. I'm mistaken. I'm mistaken. I was right. No, I was right. I was right. I was right. This was that small gap below us. This was that gap. We ran into it, consolidated, brought up, popped out, came back in, hit the high of this level. And then this line is the 50% retracement from yesterday's close to today's open. And then now we move back above it. 1040. Pull this line forward. Hmm. Every 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 entry I ever missed is the same way. It's just that little tick like that. And the crazy part is there's always like this last one. It doesn't matter if it's in the middle of the candle, it doesn't matter if it's at the beginning of the candle or whatever it is. There's always, number one, a range that you can trade from. Whoa, okay. There's always this range, and then there's always like this last little, and then it goes up. And you're saying, whoa, that was the trade I was looking for, right? That was that spot. What am I looking at? This is a 5 minute chart, right? What is that? Okay. Well, that's it. That's it. That's me trying to trade the 50% retracement on the day, and we get down here on the date, leading me to believe that we're going to retrace from the 50% level. But then we decide that we're not going to retrace from the 50% level. We're going to consolidate at the 50% level. And again, there has not been a 50% retracement um, in the last week or two of April and none of May. Every time we've dropped down to the 50% level, we've gone straight through it. And that, my friends, is just a market condition change that we just have to be aware of, that we're not going to get the 50% retracement like we think we're going to. It's just not going to happen in May. So that's that. And even if it did, there's going to be this considerable amount of consolidation at the area instead of just pressing straight through it, right? And I've seen better 50% retracements where we will come back to that 50% level, literally just touch it once and then keep going. That's something you can wrap your head around, like, whoa, okay, let's see where we're going with this. But no, we dropped into this level and we consolidated around that 50% retracement level over and over and over. And we just weren't able to grab it. We just were not able to get it. It just was not doable for us today, right? Oh, I can't even imagine how I could even get involved in a trade like this. I can't even imagine. That's wild. I can't even imagine it. It would have to be some type of a purchase like down here somewhere. See all these like relative equal lows? Then we drop down below it, then we pop right back above it. Come on down, buddy. Come on down. Hmm. There we go. Yeah, I'm a little disappointed. I'm a little disappointed because I wanted to see price action do something that it wasn't going to do. And that's just upsetting, that it would have been a great opportunity and it just did not give it. It just did not deliver that. And that's just wickety wickety doo dah, wickety wickety doo dah all down through here. Oh. All right. Well, a little bit, a little bit, yeah, yeah, just a little bit, just curbed by the market not giving me it, giving this opportunity this month at all, and it's just, I don't know. I think the thing is that I've enjoyed that trade multiple times. I've enjoyed taking that trades multiple times, and not getting an opportunity to get involved with it today really, really upset me. When we got up here and I said, "Oh yeah, this is really, really good," right? I was looking for a price to really, you know, to really expand from that point. And it was like, no. Like even here, I'm saying to myself, this gives the signal, gives is giving a signal as if we were possibly going to have an inversion of this candle. When we traded here, we dropped in. It looked like we're going to have an inversion of this candle. We moved to the low of this candle and we turn over to go all the way back in. Now we're pushing up, turning over again, and there's a lot of that. Like, and it's now price is falling, price is falling, price is falling, price is falling, and that's not what I wanted to see. Ah, what day did we have that 100% gap closed? We had one of those the other day too. It was a 100% gap close. And I think when we had the 100% gap close, we ended up hitting the Asian session high and then reversing at that point. Today, the Asian session low would be the next range, but it is down. It is. Asian session low is way down. This is the Asian session low is 19,925.25. So yeah, right now we're in the middle of that new range opening gap, but then the Asian session low is way down there. And that would bring us right back into proximity to a 100% gap closure. No, no, that would be more than a 100% gap closure. We would have completely closed the gap at that point. I'm just shaking my head. Shaking my head. All right, let's see here. What are we going to do? We're going to go ahead and shut this down. Okay, so thank you. Thanks everybody for stopping by today. I see I had a viewer or two today. Thank you very much for stopping by. Like and subscribe. And we'll be back here in the morning. We'll be looking at the charts again with fresh eyes. We came in with a lot of high energy today, and that's the thing that I really enjoyed about today's trading opportunity. Did we come in and take the trades that we want to take? Yes, we did. Yes, we did. We did. We broke low. We created a low at the right time of day. At 10 a.m., we ran down below that level. Then we popped up, we traded, dropped back down into an area. We were at 50% of the opening range gap. And I was looking for us at this time of day, at this particular place um to move up and it just it did not manifest. It did not come to fruition. It did not happen. It did not develop. It was not there. It was not there. So, yeah, that's all that we have right there. So today, right now, it's 10:50, and we are running into a macro. Macro has just begun. Um, bye bye.